Back in 2017, India pulled off one of its biggest economic shakeups ever, the goods and service tax, GST. The idea was catchy and super ambitious. One nation, one tax. But really, it was a plan to completely rewire how the entire country does business. So now that we're years in, what's the real story? Let's dive in and demystify it.
And that's the big question, right? I mean, why go through all the trouble? Before 2017, if you were doing business in India, you were tangled in this crazy web of taxes that was different in every single state. So why rip up the old rulebook and start from scratch with something so massive?
Okay, here's how we're going to break it all down. First, we'll get lost in the old, complicated tax maze. Then, we'll unpack the big idea behind GST and see how it actually works. After that, it's time for a report card, the good and the bad. And finally, we'll peek into the future to see what's next. All right, first up, let's take a trip back in time, to the days before GST. The system was just a mess. A mix of central taxes, state taxes, think excise duty, service tax, VAT, the list goes on. But the absolute worst part? A nightmare system of tax on tax. This created what economists call the cascading effect. So imagine this. A manufacturer makes something and pays a tax. Then a wholesaler buys it and pays another tax. But not just on the product's value, but on a price that already has a tax baked into it. This tax-on-tax domino just kept falling all the way down the supply chain, which of course meant you, the customer, ended up paying a higher price. I mean, the difference between then and now is just night and day. Before, you had a jungle of different taxes, that frustrating tax-on-tax problem, and a market that was totally fragmented, where each state was like its own little country. The whole point of GST was to swap all that chaos for one tax, a smooth system of credits, and one single, unified market for the whole nation. And that leads us right to the big idea behind GST. See, it was never just about a new tax. It was about a fundamental change, about rewiring India's economy to finally create that single, powerful market. And this was the slogan that really sold the dream. One nation, one tax. It's so simple, so powerful. It perfectly captured that promise of simplicity and unity, the idea of replacing dozens of confusing taxes with just one. So what did one nation, one tax actually mean in practice? Well, the goals were super clear. Number 1, kill that cascading effect. Number 2, build that unified national market. 3, simplify all the confusing rules. And finally, get more people paying taxes and make the whole thing transparent with new digital systems. Okay, so we've got the why covered. Now let's pop the hood and look at the how. How does this massive system actually run every single day? Let's get into the nuts and bolts. So India went with what's called a dual GST model. Sounds a bit complicated, but it's not, I promise. Think of it like this. For any sale inside a state, the tax collected gets split right down the middle, 50-50, between the central government, that's CGST, and the state government, SGST. But what if you sell something from, say, Mumbai to Delhi? That's where IGST comes in. It's one single tax collected by the central government, which then makes sure the destination state gets its fair share. Now, GST isn't just one rate for everything. It's tiered into different slabs. So at the very bottom, you've got essential stuff like fresh milk and veggies. They're at 0%, no tax. Common items like sugar and tea are in a low 5% slab. Most of the services we use every day, like our phone bills or banking, they usually fall into the 18% slab. And right at the top, you've got luxury goods, fancy cars, ACs. They get hit with the highest rate of 28%. Okay, so GST officially kicked off in July 2017. That gives us a pretty solid amount of time to see how it's actually done. So, what's the verdict? Let's pull out the report card and take a look at the hits and the misses. So on the plus side, there have been some major wins. For manufacturing companies, logistics got way smoother and cheaper. Why? Because trucks didn't have to sit around at state borders waiting for tax paperwork anymore. For small and medium businesses, it suddenly became a lot easier to sell their goods anywhere in the country. And for the government, well, it's meant more money coming in and a lot more people in the tax system. But let's be real, it has not been a perfectly smooth ride. The system has had some real growing pains. The rules have changed pretty frequently, which can be super confusing for businesses. The online portal has been known to crash, especially when everyone is trying to file at once. And for a lot of small businesses, just keeping up with all the paperwork is still a huge headache. So yeah, GST is definitely a work in progress. It's still evolving and changing.
So what does the road ahead look like for this massive tax system? Well, the to-do list for the future really focuses on three big things. First, simplifying the rates, maybe collapsing the current slabs into just three to make things easier. Second, continuing to make life easier for small and medium businesses when it comes to compliance. And third, using some serious data analytics to spot and stop tax evasion, which makes the system fairer for everyone who plays by the rules. Which leaves us with one last, really big question to chew on. GST has totally changed India's tax world, no doubt about it. But as it keeps changing, the main challenge is still there. Can one single tax system, no matter how well you design it, truly fit an economy with over 1 billion people in all its incredible diversity and complexity? That's the question that's going to keep policymakers busy for a long, long time.